Look, I think that's what makes investing so tough, because you can have two people that are obviously brilliant, that have been doing it for a long time, very accomplished, have somewhat different views. So that's what makes it tough. So I think they can both be right. Okay, and here's why. Howard Marks isn't saying take everything out of the market. His perspective is more from a distress point of view. That's what he does. Mary Erdos looks more broad, and she's got investors that she takes care of, ultra high net worth, and frankly, all retail, not that that's JP Morgan's game, that should take a longer-term view and not try to market time. However, what I would say is consistent with both is that it depends how you position your portfolio in equities, and now is the time to go with the quality names. Early in cycles, the crap, all the junk runs up. Okay. Now it's the good names.
So, Pete, multiples have room to grow. That's what Mary said on the stage yesterday.
Couldn't agree more. And Ken Griffin talked about 6 to 9 months. We still see stuff in the future that looks pretty strong. We've got the consumer economy itself right now looks strong. So I think there's a lot of different reasons. And you know, we've been talking about this for a long time now, but yes, FANG is the leader. Because of the market cap, they have been the leader. But it's other areas of the market as well, Scott. I mean, we talk about it every single day, but there are other aspects of the market that I think are absolutely lifting some of these boats. I mean, Bob Pisani's been all over this in terms of how many stocks are actually up this year versus down and all the rest of it. And I think there's a lot of different reasons why I think you could be very bullish now. And we talked about yesterday, bullish with protection. If you have protection, I'll give you a great example. This just happened today. So we had a client who wanted to hedge a portfolio of $5 million. It cost them $8,000 to protect it to the downside by 7% out a month. I mean, stuff like that exists in this marketplace, and it's a matter of, do you want to do that, or do you just want to roll the dice and continue to ride this thing long?
Erin, I asked Howard Marks, end of the year, market higher or lower than where it is today, as in yesterday. He said it's going to be right where it is. He said that FANG stocks, they get all the headlights, everybody loves them, but their prices are distorted by what's happening in ETFs.
Well, so one thing to note is that I don't agree that we're in the 8th inning. I think we're probably a little bit earlier than that. That aside, typically the end of the bull run in market, so when you get into the last 6 to 8 months of the bull market, you typically blow off the top. Typically, that's actually a great time to invest. The S&P historically is appreciated anywhere from 20 to 30% in that last sort of inning. Right. So if that's really where we are, then you probably want to be buying stocks.
Hey, I mean, look, if Marks was sitting here, Mr. Marks would say, look, I'm not a market timer. I would just rather be early than late.
Understood. That aside, do I think we're going to be higher or lower by the end of the year? I think we're going to be higher. I think when you look at this year, we're up a little bit. We're up 5% year to date on the S&P 500. However, you've actually seen a fairly significant multiple re-rating where the earnings per share, or the PE multiple, has contracted by about 8% since the beginning of the year. I think a lot of that is on sentiment impacting the market because of the trade tensions and because of a lot of the geopolitical events out there. But earnings have been, across the board, really solid. We had over 20% earnings growth in the first quarter. We're going to probably get over 20% earnings growth again in the second quarter. All of that is supportive of an environment where if multiples did not contract at all, you would be up at 20% by the end of the year. I don't think we're going to get there because I think there's some geopolitical events that are constraining. But could we get another 5, 7, 10% between now and year end? Absolutely, and earnings support it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.